Latest GDP data helping cut some early losses, but the NASDAQ is sliding deeper into correction territory. Talking about where the market may go from here, Trivariate Research founder and CEO Adam Parker is with us here at Post 9. Adam, what a great day to have you, and thanks for coming.
Yeah, thanks for having me.
I guess, first off, it's just, are they shooting the generals on Megacap tech? How important is that?
Well, at roughly 30% of the market cap for the Big Seven, it's hard to see a scenario where the market rallies a lot and they don't participate, so you need them to participate. And the earnings season, I would say, was mixed for the collective lot. So I could see mark-to-market feeling a little worse than I did maybe 2 weeks ago about the group. But if I look forward, I don't really think they have anything that's impairing their outlook in any sort of 1, 3, and 5 year view, or at least I feel pretty good about the fundamentals. So I think you want to own those names and you want to own the market for any longer-term perspective.
And then are you seeing value in things like the Russell?
I don't. And that's a very popular topic among investors I talk to that look at this chart of the valuation of large versus small cap, and they think it looks very elevated, and they want to make a case for small caps. And you're seeing that work today. So you're thinking, all right, that's interesting, because usually in a risk-off trade, small caps lag. I don't think that's the right move in a 6-month view, because I need to believe the small caps have more margin expansion. And when I look at wages, when I look at input costs like commodities, when I look at pricing power, I don't think the small caps have more. And we did a note recently where we really broke down the market, comparing growth versus value and quality versus junk. And when you do that, value looks cheap among mega cap and small, and growth looks a little bit expensive for both. So I think when you sort of sectorize it and normalize it and profit adjust it, I don't think the small caps actually look that cheap.
So I don't know, I'm just curious, Adam, we have you on a lot. What's top of mind right now for you when it comes to this market?
Honestly, I'm really thinking about underneath the surface, like which industries and sectors are getting dislocated or opportunities. So I'm seeing things happen like staples and utilities selling off a ton because of rates and Ozempic. And can I get in there and buy a high-quality name like Coke at 20 times forward when I had to pay 30 in the past? It used to be almost offensive to buy some of these defensives. They were so expensive. Now, I don't know. Some things are emerging there. Healthcare services, people hate that sector in an election year, but they're getting cheap and they have pricing power. So I'm finding things I want to own under the surface, and I think that's been more of the topic than trying to make a market call where you got to get rates right, you got to understand, So I think I'm kind of excited about wanting to, long or short things underneath the surface.
But just to harp on the NASDAQ correction for a moment here, it's not like we're going into another rate hiking cycle, which was the last time we saw the NASDAQ in a big correction. So what is actually going on here?
Financial conditions, right? I mean, when financials get tighter, long duration assets suffer. But you could have argued that should have been the case. We should have worried about this 6 months ago. So it's hard to know what causes the 10-year yields backed up a lot in the last 3 months, and maybe that's finally people paying attention since September. But I look at those companies. I think rates are probably closer to peaking, right, than they are, and their growth rate's going to be a lot better than the broader market over the next few years. So that's why I said I think the Big Seven are probably going to be fine. And, whether you have a hiccup or two on Google or Meta and their expenses, I don't think it changes the trajectory of their earnings going forward. So I don't think you want to be, structurally negative on innovation and growth in the United States of America. I don't think that's been a good idea.
Well, we still got some mega caps to go. We'll see what we get. Yeah,
we do. I mean, obviously, I don't want to. I hate the whole, take this one stock and make it a microcosm for the entire global economy. But if NVIDIA misses, the stock market's going to get killed. Okay, so I hate doing that. But I think that's one where people would be surprised if the trend reversed that quickly. Some of these other things that we talk about every day just have a lot of different businesses, and it'll take some time. So I think right now, the risk reward for the market looks pretty good in any 6 or 12-month view. And so I'm saying, what can I buy here? I love energy. I love some of the staples and utilities for the first time in a long time. I think I can buy healthcare services. I think retailers are giant shorts. And so I think Target stock will probably go in half in the next 2 or 3 years. I mean, so I'm seeing a lot of things going on underneath that I like, long, short, but I don't really believe that this is the beginning of the end and the market's going to get killed. I don't believe that.
Got spicy there toward the end.
Yeah, he did. Well, but the one takeaway from this whole interview is if NVIDIA misses, the stock market gets killed.
Well, I think people would be very surprised.
Yes.
Yeah, but we have a ways to go before they report, so.